We've got traders at the New York Stock Exchange and the CME. I want to start with Stephen Guilfoyle. The bond situation is worrisome because this is something that back in July, Carl Icahn warned people about, saying the Fed's making people take too many risks and going into junk bonds. Is that at work with this Third Avenue Management Fund that's trying to liquidate what is now just a $700 million fund, had been $2 billion, Stephen?
Oh, this is a big deal. Just at the week ending on Wednesday, we saw $350 billion worth of retail dollars coming out of high yield funds. And that was Wednesday. I'm sure that number's a lot larger now. So, yes, you can blame oil for this sell-off, but the high yield situation is just as big a deal. And you can throw in the emerging markets. There are fundamental reasons for the sell-off on Wall Street today.
Well, exactly. So what should investors be doing? And Trevor, tell me if you think that this is something that is more worrisome, that drags out into next week with the concerns that we have about what the Fed is going to do, Trent.
I think that what we're seeing today is going to be indicative of where money goes should this volatility continue. I think you're going to see the bid continue to be strong in the U.S. Treasuries. I know it's counterintuitive when you're dealing with rate hikes, talking about being bullish the U.S. Treasuries, but you look on the flip side of it, the tangible effect of a quarter-point rate hike, it's not going to be the end of the world for the bull market in the Treasuries. This meeting tomorrow, or next week, I should say, is going to be more about the communication on the trajectory of the hikes moving forward than it is if we get a rate hike now. I just think that the bull side of the argument for the Treasuries, we still have this policy divergence where these European rates are so subdued. I just don't see how you wouldn't go to the U.S. Treasury markets with everything else going on that we just spoke of.
Stephen, talk about equities right now. Tons of red on the screen at the moment. And we've got the CEOs of DuPont and Dow Chemical. DuPont has been a real pull down for both yesterday and today for the Dow Jones Industrials. But at the moment, is the market about DuPont, or is DuPont just getting colored red because of the markets?
Well, we're seeing a broad sell-off, and I hate to go to it because it's really easy and convenient, but crude oil is going to be leading the broader market right now. And what it's doing, even if you aren't in the energy sector, Liz, it's making people scared. And when people are scared, you see this risk-off type of money movement across sectors. That's why we're seeing a strong bid in the Treasuries. I think DuPont could be collateral damage of the turmoil we're seeing with the oil market.
All right. Well, we know the chemical companies need oil products. Phil Flynn looking at oil. Is it fair to say, am I overstating it to say oil over the past couple of days has pretty much collapsed?
It has collapsed, I love the way these stock guys, they always blame oil. If oil goes up, they get blamed. If oil goes down, it's oil's fault. Everything's oil's fault. But guess what? It's creating fear right now. We saw that in the VIX index today, and that fear is permeating the entire market. But are those fears really justified? I think they're overstating the case somewhat. We've got a Fed interest rate increase. We got this report from the International Energy Agency that has not predicted demand correctly once this year.
Why are we even listening to them? Why would we listen to them?
I don't know. They only missed by 1 million barrels a day this year, and if they're off by that much again this year, we could have 3 million barrel demand growth next year. But because they're playing into that negative sentiment after the OPEC meeting. And I feel like it's deja vu all over again, because during the last OPEC meeting, prices collapsed from $80 to $40 in a couple of months, and everybody predicted $10.
OPEC is frozen
and then they went back
paralyzed
up.
and a mess. Listen, that cartel was long ago in the rearview mirror. Stephen Guilfoyle, tell me right now, are we going down and testing the lows? 300 points to the downside for the Dow Jones Industrials by the end of this session. We've got about 53 minutes to go before we hear the closing bell ring.
Yeah, you don't want to see anything below 2015 on the S&P 500 today. That's been support a couple times. If that cracks, and we're really close to it now, we could have something of a bloodbath this afternoon. If we are able, conversely, to get to 2021 and recapture that level, I'm not going to say we're all right, but we're a little better off going into the weekend.
Okay, so we're watching the S&P. It's at 2015 right now. Oh, that matches the year we're in. Good to see all of you, gentlemen. Stephen, Trent, Phil. Gentlemen, as we mentioned, we know the most volatile Dow stock this week has been DuPont.